Let's get back to energy. Shares in Occidental Petroleum saw some strength after the company topped profit estimates. But this is, of course, a challenging time for the oil market with crude barely above $60. Our guest has a hold rating on Occidental, noting that it's undergoing a multi-year deleveraging effort to cut its debt. And some of that's involved asset sales. Let's get more from David Deckelbaum, Managing Director at TD Cowen. Thanks very much, David, for joining us. So, yeah, Occidental, quite a few years ago, did a massive takeover, loaded it up with debt. Tell us how they're getting on in cleaning up the balance sheet.
Yeah, I mean, I think that this quarter marked a pretty seminal moment for the company. I think you saw perhaps about a month ago, the $8 billion or so divestiture of their OXY their chemicals unit to Berkshire Hathaway. This is going to go a long way towards their deleveraging goals. You know, they effectively were looking to take down about $6.5 billion of debt. And you look at this balance now between generating annualized free cash, returning some of that to shareholders, and then obviously focusing on deleveraging. The story now, I think, becomes much more simplified now as an upstream-focused entity with obviously some of a midstream component. But now I think the longer term is focused with Oxy on building up enough of a cash position by 2029 that they can finally clean up the capital structure and take out the $9 billion or so of preferred notes due to Berkshire Hathaway.
So they have production just under 1.5 million barrels a day, a pretty massive operation. Is most of that in the Texas, New Mexico shale?
Yeah, most of Occidental's production is focused in the lower 48. You know, they have started increasing some of their investments outside of the U.S., particularly in areas like Oman, after they renegotiated their production sharing contract with the country over the last 12 months or so. You know, they pointed out on the call, I think, that they're looking at increasing some of their Omani investments next year. They're also increasing investments in the Gulf of America. You know, I think right now, for the time being, they're looking at 0 to 2% production growth. So I think a lot of what they're doing right now is just focused on that maintenance level activity and finding some smaller ways to do better.
Maybe, I'm not sure if we can put up a 10-year chart for Occidental, but they sure have run that balance sheet hot, haven't they? They took over Anadarko and they loaded themselves up with about $40 billion in debt, 2019. And then they went ahead with acquisition of a company called Crown Rock using yet more debt. So we're looking at a 10-year chart. So the stock has not been a great performer over 10 years.
No, that's right. I mean, I think management, you know, at various points in the cycle has been highly acquisitive, especially in lower 48 resource. And I think you've seen very clearly several other peers, you know, in sympathy with that scarcity value view that's out there. But obviously going after Anadarko, as you can recall, was in a bidding war with Chevron. You know, they needed to bid aggressively in order to win Anadarko from Chevron and levered up in the process. And then obviously they took that into a downturn. So this has really been a multi-year balance sheet cleanup story. The Crown Rock acquisition was a bit more of a bolt-on, but they've effectively lowered their debt balance to levels where, you know, it was lower than before the Crown Rock deal. And Crown Rock, I think, as you saw evidential yesterday, you know, they announced some of the lowest well costs in the Permian, and Crown Rock is feeding into those results. So certainly creating a more efficient organization going forward.
And so we're just looking at some of the numbers here, actively working on that deleveraging, and you have a hold right now. What would get you to go to a buy on this stock, David?
Look, to some extent, I think that the company has done a lot of self-help things that would move things in that direction. At the end of the day, we're making relative calls against other commoditized peers that we just see a more favorable setup from a valuation perspective, whether it be a free cash yield. I think that one of the things that Oxy does have that's special, which I think we'll learn more going into next year, are some of its direct air capture facilities, which, you know, they have 2 projects starting up in the next year or so in Texas. Should they be successful in these endeavors, they'll start to be fairly long on CO2, and you can use some of that CO2 to enhance your oil recovery projects, you know, not just in Texas, but around the world. So I think that can be a proof of concept of something that could unlock more value. The company hinted at that this quarter. But ultimately, I think as you accrue cash through 2029, when you contrast that maybe with peers that are buying back, call it 10% of their market cap right now, just with free cash out there, I think that becomes just a high bar to compete with.
That's interesting. Sorry, what did you say about CO2? They're involved in carbon capture that gives them CO2 that can be used to extract oil, pump it underground?
That's right. So you can use CO2. They have 2 direct air capture facilities, really the only ones in the United States at scale. They just received their first Class 6 permit in Texas to sequester that CO2. But you're now able to take that CO2, you can store it underground, or you can use it and actually flood oil fields with it. It actually increases the ability for you to recover oil out of the ground by increasing the pressure subsurface. So that becomes sort of an idiosyncratic asset to the company, something that would differentiate it. The company already historically has what we call EOR, or enhanced oil recovery assets, in the Permian. And right now, I think they're looking at 3 different pilots and identified, I think, up to 30 more projects. So as CO2 becomes, perhaps a potential leg up for the company in terms of asset and resource, we could see that sort of catalyzing value in other areas of the business.
Thank you very much, David. David Deckelbaum, Managing Director at TD Cowen.